I'm Dovile Silenskyte, and I'm responsible for digital asset research at WisdomTree Europe. So what my role means is I travel all across Europe, meeting institutional investors and trying to educate them why having small crypto exposure within their multi-asset portfolios is a sensible way forward. And just to highlight a few items, and I'm very, very proud of this slide, and I keep on bringing it everywhere. Last year, we as WisdomTree, we were the leader by flows in Europe. So I say that the job that I'm doing is working because we attracted over 900 million in US dollars in new flows from institutional clients. Item number 2 is, at the end of last year, our total crypto range, which is 12 products, 8 single coin, and 4 crypto baskets, it had AUM of over 2 billion US dollars. And it was time when it was over 3 billion, but market went through correction. And the third point that I'm most proud of is us launching Lido staked ETH product. So we worked very closely with Lido team. It took us as WisdomTree, many months to get comfortable with this exposure. We asked Lido team hundreds of questions that they answered in a lot of detail. And I still feel bad about this because at the end of Friday, we go home, my operational colleagues sends a long list of questions to Lido team, and they diligently answer those questions during the weekend. And we come in on Monday, and answers have been properly answered, or questions have been properly answered, and we can move on to the other stage. So the team and the amount of effort that they put in was incredible. So, I like saying that investors, they have been voting with their feet by going into the products that we as WisdomTree have. But to get them to this position is not an easy task. So for example, I may go to Lugano and I may see a client 1, 2, 3, 4, even more times before they get comfortable putting some of the money into crypto exposures. And the most powerful message that I have, this is my favorite slide ever, honestly, because what it does is it shows the total portfolio, which consists of liquid, tradable instruments. So if somebody wants to be market cap neutral, that is, if somebody wants to say, I will just invest in line with the total global portfolio, then you need to have approximately 1 to 2% allocation to crypto. And this is the top box. This figure, of course, changes subject to how the markets are moving. At the end of August last year, it was 1.7%. At the end of January this year, it was 1%. So 1 to 2% is market cap neutral position. And I tell every single investor that if you have 0 crypto within your portfolios, then you're making an active decision to underweight this asset class, which is not correct, without doing proper homework. And when you do homework, you see that a small crypto allocation actually improves the portfolio risk-return metrics. But then the discussion, so investor may say, yes, I get this. I get that I should have some crypto. What should I invest into? And most of them recognize Bitcoin, because this is the name that has been running for over 17 years. But then I say that Bitcoin is store of value asset. It's like digital gold. But if you want growth that will come from future of finance being built on blockchain, then you need to look beyond that. And the other name that they always look at is Ethereum, because this is the name that has been running for over 10 years, and it has proven itself from an operational perspective. So, as I mentioned, Bitcoin is the entry point. This is where most institutional clients start. Once they have had Bitcoin exposure for 1 to 2 years, then they feel comfortable to explore what's outside there. And I always highlight to them that all that Bitcoin is store of value asset. And I try to show Bitcoin, gold, and cash on side-by-side basis. And here, the only place where Bitcoin is slightly behind 2 others is the history. Because when you look at gold's history, it's over thousands of years. Cash, hundreds of years. Bitcoin, over 17 years. In our world, 17 years is a lot. I tell everybody that if you are involved in our world for a year, it feels like a decade. There's so much happening. But for traditional investors, they still think that Bitcoin does not have as much history. And Ethereum is where the future of finance is being built. This is key. But also the other point that Ethereum highlighted is, we as WisdomTree, we have standard physical Ethereum product that we stake. We do native staking for it. And there, to manage liquidity, we have to limit the amount of funds net asset value that's staked. Because as you must know, towards the end of last year, it took approximately 50 days, that's 50, to unstake ETH. And our product, it's listed on regulated exchanges. It's listed on SIX, etc., Euronext Paris, Euronext Amsterdam, London Stock Exchange. And their investors are able to trade in or out on daily basis. So if they want to or if they need to, they are able to sell it any day that the market is open, and they're able to get their cash back on T+2 basis. So if it takes 20, 30, 40, 50 days to unstake ETH, then it doesn't work for our product. We can't stake 100%. So to manage this liquidity risk, we limit the amount of funds net asset value that we stake. But this leads to reduced staking reward that investors get. And most institutional investors I talk to, they say, WisdomTree, we understand why you're doing what you're doing. We understand that you can't stake 100% of funds NAV, because you need to ensure daily liquidity, but we want higher staking reward. And for those investors, we launched Lido Day Cannes product, which is 100% staked all of the time. And now I have a brilliant job, because now I travel all across Europe, meeting investors in Zurich, in Milan, in Madrid, in all the beautiful sunny cities, where I educate them about what Lido staked ETH is and how it works. But the key message that I give them is, it's possible to have it 100% staked all of the time because of the ecosystem that was built around it. Because there is secondary market liquidity, so Lido staked ETH can be sold without needing to unstake it. And most investors, after they listen to me and after they are able to ask me a number of questions, same manner as I asked Lido a number of hundreds of questions, then they start understanding this and they start getting more comfortable with the idea of investing into this product. And actually, the outlook that I published at the start of March, so this outlook is crypto outlook for the next 12 to 18 months, I had 3 key themes. Theme number 1 was institutional normalization accelerates. So what this means is more and more institutional investors are recognizing that they need to have some crypto within their portfolios, and they're choosing to get this exposure via exchange-traded product wrappers, because those wrappers fit in easily into the existing compliance, performance, risk, and all other systems. Topic number 2 is income moves to center stage. So all traditional investors know the concept of total return. That is, you can't only look at the price change, you need to look at the yield that you're getting. So for them, it's very, very important to understand that there are certain crypto exposures, such as ETH, that generate yield. And they need to choose a product that has the highest staking reward after the management expenses are subtracted. And topic number 3 is portfolio integration deepens. So as I said, if you want to be market cap neutral, you need to have 1 to 2% allocation on average. If you have no allocation, then you're making an active decision to underweight this asset. And before doing that, please run the analysis. And here, I did not show the slide, but once you run the analysis, you see that this small allocation actually improves the portfolio's risk-return metrics. So by making an active decision to underweight this, you're hurting your portfolio outcomes. And that's it from my side. So